Low 1196.8. We're at 1197.8 right now. And it's a couple points off the lows on the spiders. Not massive move there. Looking on over at the Dow, it went down to 17,823. It's at 17,839 right now, so still pretty close there as well. And more off the highs than anything. Looks like everything went up and dropped down about 10 points plus. Looking on over at gold, gold right now is down 10 points on the day. So Dow down 25 points on the day. So nice move right there. It's a big move. So $10 a tick, $100 a point. That's a $1,000 move on a gold chart. So gold's got some volatility in it, and you want to take advantage of that. I mean, we moved from 1071 to 1053 today, so we've had a nice range. Going on over to copper, down 0.026. We got oil flying on down. You got to love oil. So, people are like, markets are flat. Oil is not flat. It's down $1.29. So that is massive. Again, $10 a tick. Every tick is a penny. That's a $1,300 move. There is plenty. You just capture a third of that a couple times, and you're a happy person. So we got some nice moves in oil. We got natural gas down 0.067. We got corn right now is down $2.25. So right now, it's barely off the lows, barely off the highs. It's been in a pretty tight range. We got soybeans is up $3, so sort of opposite there. Looking on over at the bonds. Bonds right now are currently down 0.07. We got dollar index is up 54 cents right now, sitting at the last quote of 100.38. And so we've had a decent little range there on the dollar index. We got euro dollar moving nice, down 60 pips on the day, giving us some good movement right now, and it's sitting off its about 10 ticks off its lows right now. We got euro yen is up 81 pips. Euro pound is down 31. We got a pound dollar down 15, pound yen down 76. And looking on over, we got dollar yen up 66, Aussie yen up 28. We got the Aussie dollars down 16. Dollar franc is down, or up. Dollar franc is up 12 pips on the day. Dollar CAD is up 4. We got silver up 0.143. NASDAQ currently up 12 points. And some other pairs I've been watching lately that have a lot of spunk to them. And I mean, just nice smooth movements. Pound Aussie right now, and for trading obviously on spot FX, but that's down 156 pips. So that's a nice move right there. And we can also look at Aussie New Zealand, and that one is up 45 pips. And you can also look at, let's see if I can pull it up, New Zealand yen, and we got that one that's pretty flat, up 2 pips on the day. So I may take that one back off. But Aussie New Zealand doing pretty good right there. Like I said, down 45, and pound Aussie doing fantastic, down 156. And, obviously that's the pound dropping right there, because the pound dollar itself is also down 159. Stay right there, and we will get back to you right here after this show and talk about the top news that's in the market.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Alrighty, folks, we're going back here to the Diagnostic Trading Hour. And we got you caught up on where all the markets are at right now. And let's dive in. Let's see what else we got. We're going to go in and we're going to check out our news. And we're going to look at top headlines of the day. And we may get to a few charts as well. And maybe we can find some setups during this lunch hour. We'll see if we were able to get to that today. We have not caught up on the news in quite a bit because I was out last week. I hope you and your family had a wonderful Thanksgiving and were able to spend some time with people that you're thankful that you're around. And sometimes you get those in-laws you're not as thankful about, but overall, hopefully you had a great time. Me and my family, my daughter and I, and my wife, and my son. And I even brought my mom. So Grandma came along, and we all went out to the island of Kauai. Got some great tips from one of my traders that lives out in Hawaii. And we had an absolute blast. We went out on ATVs and zip lining and scuba diving and snorkeling. And what else did we do? We just did one thing after another. And very active vacation. And, of course, I just went out and just hung out at the beach and had a good time. And so it was a lot of fun, and Grandma let me and my wife get away, took her on a helicopter ride around the island, and that was a lot of fun. Just, good times, good memories, and had a hard time finding a reservation on the island, and we were driving around, on the way back home after getting all muddied up in an ATV, trying to find a place, and found this wonderful restaurant over there, and it was fantastic. It was perfect. I mean, they actually had turkey, they had ham, they had Thanksgiving dinners, but they also had all the seafood and everything. And my daughter really she just wanted to have turkey for Thanksgiving. So she got the turkey thing, and my wife wanted to have the ham, and it was called just limegrass seafood or whatever. And I looked it up on Yelp, had great reviews, and I got these awesome pork ribs, and I was very happy. So, but it was fun. It was a really good time, relaxing. Turned off the phone for about 90% of my trip, and that was nice. I just if they need to reach me, they got my wife's number, and just sat back for a little bit. So, and it's hard for us to do as traders. We always want to be looking at the markets, but I'm like, this week I need to take off. So I hope you took off some time as well and enjoyed the holidays with some friends or family or both. Let's see, what do we got on the top news in the market? We got Canadian stocks are slipping on down. So they're moving down right now. And the stocks away, the banks bounced a little bit, but TSX fell 38 points. And 10 of the main groups declined down on Wednesday by a fall in energy stocks, cheaper oil, losses for miners as gold and copper is also, overall moved on down. And let's see here, we got gold is still down on the day. So having a big, obviously, impact on the Canadian markets. U.S. stocks struggled a bit ahead of Yellen's speech over here. So that's coming up. And so trading in pretty much a flat note as they wait on Federal Reserve at Yellen to give a speech. We can look over here. We can find that Yellen will address the Economic Club of Washington in the afternoon, with investors looking out for further hints regarding much more liftoff. I don't expect a lot to come out of this. It's National College Fed Challenge Finals, but anyways, I mean her notes, everything she says obviously means a lot. But let's see, Yellen in back-to-back appearances could close out era of zero rates. So Janet Yellen could seem in the case for a U.S. interest rate hike ahead of the Fed's December 16th, announcement, policy meeting. She has public appearances over the next 2 days at high-profile economic groups before a joint committee of Congress. When Yellen takes the stage at the Economic Club of Washington shortly after noon on Wednesday, she will do so with market expectations already aligned behind the December hike and the flow of economic data. Isn't it amazing how the Fed doesn't have to raise hikes? They just got to show up, okay, and talk, and everybody does it. And I think, and trust me, I'm not getting the Fed props by any means. I have a lot of problems with how the Fed operates. But they kept saying, we're going to raise hikes. Not yet. We're going to raise hikes. Not yet. We're going to raise hikes. Not yet. They said we're going to raise hikes so much that by the time that they raise hikes, right, raise or hike the rate, that people are surprised. And it will have less of an impact. It's actually a pretty good strategy if you think about it. Stay right there. We'll be back after this.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All righty, folks, so come on back here to the Diagnostic Trading Hour. And going through just cleaning a couple things up over here. All right, there we go. Okay. Okay. So, like I said, on our last break, we were talking about how, you know, the Fed can just say, oh, we're going to raise it, and then no, we're not. Oh, we're going to raise it, no, we're not. Oh, we're going to raise it, no, we're not. By the time they finally raise it, nobody cares. So I don't think it'll be as dramatic. I mean, I want to say it's going to be dramatic because I am all about volatility. And, but, you know, I don't think it's completely unexpected that this will happen. So, and let's see, let's go on over here, and let's see. And if they don't do it, like, it won't be a surprise. And then they raise it in January. To me, it would honestly be a surprise that they do raise it in December, because it's such a positive month historically, seasonally. And either they're just wanting to, hey, let's throw out the bad news during the good times, so that helps balance it out. Or, you know, or do you want to mess up a year that's already on the rocks, you know? And so I would find that sort of odd if they went ahead and pushed that through. But versus just throwing it in there out in January and letting the year end out good. But, it does make some sense to throw it out there while things are usually pushing things up. Or maybe just the holidays will lift it right back after the drop. It'll be like a 1 or 2 day event. So we'll see. It will definitely create a little turmoil. I don't know if it'll be as big as we all thought because they've taken so long to do it and they've given so many, false cries there, wolf cries there, that I don't think it'll have as big of an impact. Oil inventory keeps surging up, 10th week in a row, dropping oil down, down, down. If we go on back and we look over here at the news today, at the FOMC, and we have the ADP and FP, but let's go back and look at the not the FOMC, sorry, crude oil inventories. And we'll click on that right there. Pardon me. And we go in. It was at 1.2, which was pretty high. The expectation was it was going to drop, and it actually increased. The inventory went up by 1.2 million. If we go in and we look at the actual release, let me zoom that in so you can see it. And U.S. commercial crude oil inventories, included those in the Strategic Petroleum Reserve, increased by 1.2 million barrels from the previous week. They thought they'd drop by almost 500,000. At 489.4 million barrels, U.S. crude oil inventories remain near levels not seen for this time of year in at least 80 years. So enjoy your cheap gas prices. That should help drive the economy. And maybe that's, maybe that's part of, hey, let's raise rates while oil's cheap and gasoline is cheap because that's less money coming out of people's pockets that they have to spend to get to work and everything else. Maybe they'll spend it out in the economy. It keeps the money supply going. I don't know. I never know what's completely behind. Nobody knows what's behind the ominous actions of the Fed. But, those things that can fall into place there. Gold falling, had a 1% drop ahead of ECB and U.S. payrolls. So on Thursday, we got the U.S. payrolls, which come out every Thursday. So not necessarily, I think, the impact. A lot of times people could make it about the impact. We got what we do have happening tomorrow. Today, 12:25, obviously, has not been some massive market mover. As I said, she's just talking in front of a group. Tomorrow, she is going to be testifying in front of Congress. So that right there, where she goes in and gets to explain that before the Joint Committee, and there's a lot of questions and fun stuff about that. That can have a bigger impact. And she reads a prepared statement, and then the committee holds a Q&A session. And so you can definitely get some volatility on that. So that 10 a.m. event is one that you want to put on your news list. So definitely, like I said, one that you want to put on your news list. And she controls, obviously, the impact that people are going to be. That's the one they're going to be paying attention to. Okay, so again, at 10 a.m. At 8:30 a.m., we have the ECB press conference and minimum bid rate. Okay? And so the rate usually has a small impact unless they raise it. They may go and say, hey, we'll put more money. And but that's just the rate. So they don't say anything then. Okay? So I don't see them changing the interest rate over in Europe right now. So we got, usually like a neutral condor. We'll go over that on the bid rate on the ECB press conference. That is usually a straddle. That's usually a big event. So again, make sure you have that one on there. Those are, it's a couple big events. So market will probably be a little bit quiet leading up to those events. I like it better when we have the pound and the euro together, but they have, for some reason, decided to separate those. Aussie will have retail sales tomorrow night. We'll finish off the week with the CAD unemployment rate and the NFP. So big week and usually bigger move, okay? When you combine the Canadian unemployment with the U.S. unemployment, that usually gives you bigger moves, especially on the dollar CAD. So hopefully this will open up to some more stuff. I'm also going to have OPEC meetings happening on Friday. That could cause a little volatility on Friday in oil as some stuff comes out of that. So they're held in Vienna. They're attended by the 13 rich oil nations. And they discuss a range of issues. What they're going to talk about, they talk with reporters throughout the day. So it's a closed conference, but they talk with reporters, again, throughout the day. And represents about 40% of the, oil world. So we do have some volatile things happening here tomorrow and Friday. So we ought to get some decent volatility, should make for a little bit of fun in trading. Job data came out. Dollar rose a little bit. DX got a little strength out there. Euro data is near 7-month lows. But the ADP employment rate came in and actually looked really good. So if we look at that, again, that's from today. That number came in. Didn't have just a massive impact on the markets. The Feds want to see, everything else is going to come out, I guess. But if we go in and we look on the information that came out today, let me find that ADP and FP right there, and came out at 217,000 on expectation of 191,000. Non-farm payroll, which hasn't been the greatest leader, but said, hey, the ADP and FP, the biggest payroll company in the United States, is showing, good information. So that could lead to possibly a good NFP on Friday, which would be just one more reason for the Fed to raise the rates. So that gives the dollar strength. It makes gold and oil cheaper. It'll make a lot of your currency pairs, pound dollar, euro dollar, will go down because the dollar's getting stronger. The dollar's getting weaker, they go up. So basically the dollar's getting stronger faster than the euro's getting stronger. All right. And, or the euro's getting weak and the dollar's getting stronger. So any of those combinations. Yeah, so we do have a Q&A session. We just don't have much movement on anything that she said. So, down 5 points, 4 points, 3 points. So really just not a big deal on that event. Usually isn't whenever she does the small little town hall things. And she'll have some, questions, but they're going to be filtered. At Congress, they're not going to be so filtered. They're going to be very direct. And they're going to ask her hard questions. Nobody wants to go to that party and ask them small questions. Okay? Or hard questions where they're just not going to let them ask the hard questions. Like, hey, why does the Fed hose the United States? And, rip off people that, have no money by inflating their, inflating cash and deflating the power of their buying. So, they're not going to ask them the hard questions. They're not going and say, hey, is there really gold inside the reserve? And I think we need to do that. And, why haven't you raised them already? And when are you going to raise them? And it's going to be very, they're going to be underhand, easy softball pitches. So I don't expect anything massive to come out of it. Hey, I could always be surprised, but usually when the town hall meetings happen, the Congress meetings usually have a big impact. And but the ones, you watch it on C-SPAN, all that fun stuff. But the little other ones are, it may be an important forum, but it's usually not, hey, we're going to hold you to the wall. And that's where you really want to pay attention to those specific meetings where they're going to hold her to the wall and be more accountable. So picture on Reuters, obviously, if history is a guide, the dollar will drop after a Fed hike. Well, that just makes sense because the dollar becomes, the dollar will drop after a Fed hike. Well, actually, that'd be pretty interesting because the dollar should technically get stronger, right? So, because the interest rate goes up, the dollar is more valuable. So it should drop against another pair like euro dollar. Okay. But technically it should go up a little bit. Says, but history is not, this is an interesting little article. History is not on the dollar side. The last couple decades, the dollar index, the DXY, which measures the greenback against the basket of 6 currencies, has fallen every time the Federal Reserve has begun a cycle of interest rate hikes. So that's a little bit different, right? This graphic shows the change of the dollar index before and after rate increases. So I would notice that on 2 of those 4 that it's showing, well, one of them there's nothing on it. 2 of them it actually went up before it went down, and it took about 1 to 2 weeks before it dropped. So be careful on that article. But it shows that after 1 or 2 weeks, except for one of them, the one in 2004, it dropped like immediately. So if you're taking a longer term outlook, like 3, 4 plus weeks, then that could definitely be a solid play based on history. But just be aware that there has been these bumps that go up before it goes down. So it's a little bit, of course, I think in very short term. Somebody thinking in 4-week terms would say, hey, it goes down. So anyways, but looking back over at that article, let's go back and look at it in detail here. So, interesting one. So the Fed will likely hike rates on 60 for the first time in almost a decade, and many big banks, including Goldman Sachs and Morgan, think the dollar uptrend that began in the second half of 2014 remains intact. Well, I usually would go with Goldman. Of course, they'll think it remains intact long enough to sell everything that they have and take the profit, right, to everybody else. And then they'll go, yeah, we think it's going down after it's going down. Speculators are holding huge bets in its favor, given the U.S. economy is outperforming its peers, and the Fed is the only major central bank set to raise rates. And the other, Europe has already said, hey, we'll print more money if we need to. They're still ready to, they got that printing press still going, solid. So on Thursday, the European Central Bank is likely to lower rates deeper into negative territory and expand its asset purchase program. So be careful on the neutrality. If, there are people thinking that they may lower the rates, they do lower those rates, then there will be a massive drop in the euro, and that would give the dollar more strength. Let's see. Let me add something. And something that Larry mentioned on his show there is that in Germany, you're actually paying interest to put your money in the bank, which is, we're talking about bank greed. That's at its finest, right? But anyways, but the ECB may actually go ahead and drop its rates. That'll be interesting to see. If it does that, we're going to have a lot of volatility. So then we follow that up with, Yellen talking in front of Congress, and when the press conference, ECB press conference, Draghi talking, and it's just going to be a fun day. I hope all this stuff happens. We'll get a lot of volatility. It'll be a lot of money to be made. A Reuters poll published on Wednesday showed 40 to 60 strategists pointed to more dollar upside in the coming year. So 40 of 60. But there's a view emerging that the divergence trade, which reflects the contrast between the Fed's tightening and the easing stance of the European Central Bank and the Bank of Japan, which is both the dollar against the euro and yen, is probably in its final stages. Well, if the Europe's going to lower their interest rate and keep printing, and the dollar is going to raise its interest rates, where are we at the final stages? Stay right there. We'll be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of the banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Alrighty, folks, welcome back here to the Diagnostic Trading Hour. And let's go into this Fed rate hike thing going on. Going forward, if rates move higher than expected, then the dollar will go up a little. However, if at next year the Fed thinks it needs to slow it down because there are 4 expected rate hikes over the next year, then it will drop. So we think that, a 10% trade weight application this year, we're headed into the realm of slightly weaker dollar. So not necessarily over the next month or two. This is, I think, the key phrase in this entire article because it makes it sound like it's going to drop when it comes out. Not necessarily the next month or two, but as we progress through the year, we see the dollar weakening at 1.1 against the euro as the economy recovery in the Eurozone continues and a very modest pace of interest rates start to pan out in the U.S. So which makes it, as they continue to raise interest rates, the dollar gets stronger. As the euro drops interest rates and keeps pushing money, it gets weaker. So it's a pretty weak argument. And obviously, if either one of those things changes, of course, that would change the dollar's value. But the title, Futures Guide, dollar will drop after the Fed hike, is very weak. And so when you see these articles, see if they make sense. I mean, even their own chart showed that 2 out of 3 times the dollar went up, and then eventually it went down. So it went down against what? Well, if we're talking euro and they keep printing money and dropping interest rates, it'll be harder for the dollar to go down on that. should be looking for some good volume in the DX, obviously in the euro dollar, pound dollar, Aussie dollar, dollar yen, all those look like they could bring some good volume for you. So anyways, hope that makes sense and that will help you a little bit as these numbers come out next week. And as Yellen starts talking tomorrow, expect some volatility. As Draghi talks tomorrow, expect some volatility. As NFP comes out, expect some volatility. And, we'll go into a little more detail on each one of those trades tomorrow on the show. And I've talked about many times, you can just look at any one of my archives of the show right before an ECB interest rate, and I talk about how to trade that. The interest rate usually is neutral, but they're looking at changing it, so use extreme caution and neutral trading on the ECB interest rate because there's a slight chance of that. What I would be very aware of is before the press conference, you're looking at a straddle, okay? And ideally as much time as you can get, but don't overpay for it. But usually you get a good, 80 to 100 pips out of the ECB press conference that happens on Thursday. So looking for, probably about a 40 pip if you can pull it off straddle. You could look at another 2 parts. It does extend out for like up to 2 hours. So, ideally you're getting at least a 10 o'clock expiration. That press conference comes out at 8:30, so you're going to get in somewhere around 8 to 8:25. And it usually starts off a little slow, and then as the question and answers come, you usually get a lot more, and you'll see some big moves happening tomorrow morning on the euro. So don't be shocked by it. Be prepared for it. If you don't know how to trade it, you can stay out of the way. If you like volatility like I do, like most traders that have been trading a long time, that's where the money is, then definitely hop in and be trading and be on your toes and be ready to switch gears at a moment because it could fly up 40 and then fly down 30 and fly up 70. And you just, just be ready to hop and change directions in a heartbeat. Don't be sitting around. Don't be using big bars. Be using tick-based bars. All right. Well, we had a wonderful Thanksgiving holiday. Christmas is coming on around. And just to remind you, we got Steve Rhodes coming up next here with The Trader's Edge. Y'all have a great day, and I'll talk to you tomorrow right here on the Diagnostic Trading Hour.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.